Good afternoon, and thank you for joining me again. Today, I want to touch base on a form that is very simple on its face. It's only a couple pages long, but it can cause a lot of frustration for everybody, for employers, employees, tax preparers, because it doesn't quite do as much as any of us would like in getting withholdings correct on paychecks. So I'm going to go through the form, each section, and explain what those do and some of the limitations to this form. So if you've had a W 2 job in the past, or if you've been an employer, you've seen this W 4. Every time you get a new job, you have to fill this out for your employer. What it does is it tells their payroll system how much withholding to take out of each of your paychecks each week. And the way that does that, it basically is computerizing what used to be done by hand decades ago, and still can. If you want to do payroll by hand, you can still do it with tax tables, and the IRS has this handy dandy publication. If you ever want to look this up, if you don't trust your withholding that's coming out of your paycheck, there is this form that you can look up and you can double check your paycheck. So it's publication 15T on the IRS website. And all you do is you go in and look up information on your particular payroll situation. So if you're getting paid biweekly, if you're every other week getting paid by your employer, and your tax situation on your 1040, if you're single, then you would look up this table. You say, hey, I'm getting paid biweekly, I'm single. You go down and you look at how much your gross was for the week. So if you come down here and you say, hey, I made $490, you fell between the 485 and the 495. So you look at this line item over here, and then all this does is it's looking to see how many dependents you had on your W 4. So if you had 3 or 4 dependents, even if you made $500 for the week, it's not going to take out any withholding. It's going to say, no, you're in a low enough tax bracket that based on this paycheck, you don't need to have any withholding coming out because you're not going to owe the IRS any money at the end of the year. So we're not going to take it out just to have to refund it back to you. Now, if you're making $500 and you have no dependents, you're a single individual, then $29 or thereabouts. The computer might round this up within a dollar or two, but you're going to have about $29 come out of that paycheck. These are tax tables that the IRS updates every year based on the current tax rates and the current standard deduction tables to try to do their very best to withhold the most accurate amount from a paycheck that they can so that people don't owe at the end of the year. Um, other than doing tax planning, that I try to get right with estimated payments, I don't know that in my career I've ever had anything get exactly to a zero, but this should get you pretty darn close. Now, one thing to keep in mind is this form is really set up to know the information for one employer and one paycheck. It's telling their computer how much money to take out of that one paycheck when they run payroll on Friday. So it's not sophisticated enough to know if you have a rental property, if you have, if you're driving for Uber on the weekend, or you have a lot of investment income that you may need to have withholdings for too. If you get into those more complex tax situations, that's when it's time to do some tax planning with a professional to do some more complex calculations to make sure that this gets right. This is really just set up to do the easy peasy returns. So it should absolutely work for your kid if they have a part-time job during the summer, or if you're a single individual and even if you have one dependent, it should get pretty close. But if you're married with multiple jobs and stuff, that's where it doesn't know enough information to maybe get things accurate. But we will try to trick it into getting things close by doing a couple things. So when you fill out this form, it's going to ask you the basics, your name, address, social security number. This is what your employer is going to put on the W-2 at the end of the year. So if this changes throughout the year, make sure you let your employer know that you moved so they can update their payroll system and get it right on the W-2 at the end of the year. The next question it's going to ask is your tax filing situation. So this isn't maybe the same as your actual married situation, this is your tax status. So on your 1040 at the end of the year, are you filing your 1040 as single or married filing separately if you and your spouse are filing separate returns for whatever reason? Or if you're married filing jointly, or if you're a widower or a widow, or if you're head of household because you're single but you have a dependent, you have a child that you're taking care of that puts you in a little bit better tax bracket. So what this is doing here is it's telling the payroll system when it's looking at the tax tables, which tax table is it looking at? Is it looking at the single person tax table? Or is it going down here and looking in the married person tax table, which you'll see if you're married, even if you're making up into $600, you're going to have very, very little taken out, or possibly even zero. Versus at $650, if you were single, it's going to take out about $40. So that's where that is going to tell the payroll system which tax table to look at for how much money to come out. And sometimes one of the easiest tricks to do, if you want more to come out, some people will tell the payroll system to take out the single rate, this $40, rather than taking out um, this couple bucks down here, like $4. So you can see it's taking out 10 times as much. No, that won't be true all the way down here. But for this one, it's going to, if you're married, it's going to take out $4. If you're single, it's going to take out 40. So it's taking into account that you're in different tax brackets and you have different standard deductions for married versus single. Then down here, this is new in the W-4. So employers, if you haven't given your employees a new W-4 in the last 3 or 4 years, you may just want to do this, just kind of a general housekeeping thing to make sure things are as accurate as you can get them for their taxes at the end of the year. So if you're using an old school 2020 or prior, or 2019, I think is when they really revamped it. If you're using an old school W-4, give everybody a new one. Just put this information in your payroll system, and it should help things get a little bit better for your employees, a little bit more accurate on their paychecks. This section, which they added into the new W-4, is trying to get things a little bit more accurate if you have multiple jobs. So the third page of the W-4 is trying to ask about your job. So it's saying, hey, if you have multiple jobs, that's probably going to put you in a higher tax bracket because you're going to have more taxable income. So it's trying to get some very, very, very basic information on here to try to do more withholding. It's still not going to know about rentals and all that kind of stuff, but it's at least trying to get closer than we used to with the prior forms. Down here, it's going to ask about your dependents. It wants to know if you're claiming any children on your return. The reason for that is if you have children under 17, if you're within certain income limits, you are probably getting this $2,000 child tax credit on your return. So this is telling the system, hey, we don't want to withhold too much. They're going to get, if you have 3 children, that's a $6,000 child tax credit that you're getting on your tax return. So that's $6,000 you don't owe to the IRS every year. So it's going to take and say, okay, normally withhold this, but because they're getting that $6,000 back that up. Let's not take out that $6,000 so they just have to get it refunded at the end of the year. If you have dependents over 17, then you're only going to get $500 per year for them. So it's going to take into account the lesser amount. Now, I completely understand some people like the additional withholdings because it creates a forced savings account for you that helps pay for vacations or whatever at the end of the year. And you kind of like that refund at the end of the year. So if you don't fill this out, it will withhold more. This is just trying to get you as close to zero owing at the end of the year as possible, which is the ideal answer on a 1040. So if you leave this off, it'll just withhold more from your paycheck. This section down here takes into account any answers that you did over here if you have multiple jobs. This is also if for some reason there's not enough coming out of your paycheck, the easiest way to kind of trick the payroll system into taking more out is just put a flat amount in here. So if you're finding at the end of the year that you're owing $1,000 and you want to get that closer to zero, the easiest thing to do is take that $1,000 and divide it by how often you're paid. So if you're getting paid every 2 weeks, you're going to get 26 paychecks during the year. So take that $1,000, divide it by 26, and then put that figure in here to have that come out of every paycheck to kind of get you closer to zero. If you're getting paid every week, you're going to get 52 paychecks. So divide that $1,000 by 52 and put that figure in there. So that should get you a little bit closer to zero and hopefully not nasty surprises come tax season. If you want to see if your pay stub is correct, say you just got a new job, often what I tell people, if they're not sure and you want to kind of do a quick way without doing serious tax planning, which the only way I get to a really accurate answer is to basically try to prepare your current year return ahead of time. So I'm going to look at every single aspect of your tax return. And that's the only way a preparer can get you an accurate answer. We're going to try to guess how much you're going to have in rental income or investment income and all that, and work up a mock tax return to try to get this right. If you want to shortcut that a little bit and try to at least see if your pay stub is in the right ballpark, what you can do is, now that we're in 2023, look at your 2022 tax return. So on page 2, look at the line that says total tax. So that was your total tax that you owe to the IRS for the year before any withholdings to see what you actually had to write the check for or how much your refund was. You want to look at your total tax due. So if that was $5,000 for the year, then you look at page 1 to see what your taxable income was. So if your taxable income was $50,000 and then your total tax was 5, that's saying you were effectively in the 10% tax bracket. So you want 10% being withheld on all your paychecks every week to try to get as close to zero as you can, or at least be in the right ballpark so any refunds or tax due are minimal. If you find that your paycheck, say you get it, and for some reason, you put that you had 4 dependents and it's not taking out any withholding or very little, and say you've got only 3% coming out of each of your paychecks, and you think you should be closer to 10%, that's where you can tweak this. Either tell it less dependents here in this section, or have it like I said, if it looks like you're going to owe, if it's taking out 3% instead of 10%, figure out what that difference is, and then just simply plug in. Tell your employer, hey, take out an extra $10 or an extra $20 every paycheck to help minimize any surprises at the end of the year. That's really the only thing that your employer can do. So they can't do tax planning for you. They can't be answering too many questions on this. The only thing the payroll department can do is take this form, key this information into the payroll system, and then let the computer do its calculations. So they're legally not allowed to answer any more questions than that. They can't do tax planning for you. So hopefully this answered some questions, kind of shed some light on what the heck this form is doing when you give it to your employer and then they magically give you a paycheck and you wonder why zero is coming out. You can see that there's a lot of instances where zero could be correct. If you're married and you're getting paid every 2 weeks, there's no withholding coming out if you have a couple of dependents till you get down to about $1,000 paycheck. So like I said, if you want to look it up, double check these charts just to give yourself peace of mind that your withholdings are correct. Or employers, if you have people come to you and are asking, you can look up these tables and show it to them and give your employee peace of mind, and then tell them if they have any more questions, they need to go back to their tax preparer or their CPA to try to tweak things so that they can update their W-4. So I hope this answered some questions. If you have any comments, please leave them below if you're on YouTube. And if you enjoyed this and want to follow for more videos, please like and subscribe to the channel, and you'll get notified when I upload some more, which I will try to do on a more regular basis throughout the summer. So thanks for watching and have a great afternoon, everyone.